Hello, this is for the CMA. I'm gonna talk about cash flow statement. As you know, we have two methods, direct method and indirect method. I'm gonna explain only one, which is the indirect method. And the difference between the two is only in the operating activities section. For the investing and financing, it's gonna be the same under direct and indirect. Cash flow statement is a financial statement that summarizes the amount of cash and cash equivalents entering and leaving a company, which means cash inflows and cash outflows. So I'm gonna write only the transactions that gonna affect the cash account. Now, we have three sections in the cash flow statements. The first one is for the operating activities, the second one for the investing activities, the third one will be for the financing activities. Now, for the operating activities, again, this is the indirect method. I'm gonna start with the net income from the income statement. Then I'm gonna add to it depreciation expense or depletion expense or amortization expense, okay, or all of them if I have them. So depreciation normally is for the plant assets like building, furniture, equipment. Depletion will be for the natural resources, okay, like oil. And amortization will be for the intangible assets like let's say patent, franchise, copyrights. All of these amortize over time, so we're gonna add the amortization expense to the net income. And if we have loss or gain on sale of assets, so if I have a loss, I'm gonna add it. If I have a gain, I'm gonna subtract it. Then I'm gonna look at my current assets and at my current liabilities. Now, as you know, the accounting equation is assets equals liabilities plus equity. So now I need to think about current assets and current liabilities. Now, if an asset increased, so what's going to happen to the cash? If any other assets increased, what's going to happen to the cash? The cash will go down. We'll go with the opposite direction, okay? While for liabilities, if liabilities increase, it means cash has increased also. So they will go with the same direction. Now, the second section is for the investing activities. I'm gonna look at the long-term assets. So if I sell any long-term asset, for example, I sold a land or I sold a building, okay, so I'm gonna receive cash, so I'm gonna add it. While if I bought something, I purchase a land or a building, I'm gonna subtract because I'm gonna pay cash, so my cash will go down. Now for the financing activities, we're gonna look at long-term liabilities and equity section. So if I retired any loan, I paid my loan, so my cash will go down, so I need to subtract it. If I issued stock, it means I'm gonna receive cash, so my cash will go up. If I paid dividends, I'm gonna decrease my cash, so I need to subtract, okay? At the end, I'm gonna see the cash provided or used by operating activities, investing activities, and financing activities. Then I'm gonna see the change on cash. So this is a CMA question, okay? I'm gonna read it for you. Then we're gonna do the operating activities section, then the investing, then the financing, okay? Madden Corporation's controller has gathered the following information as a basis for preparing the statement of cash flows. Net income for the current year was 82,000, so this is the net income. During the year, all equipment with a cost of 60,000 and a net carrying value of 53,000 was sold for cash at a gain of 10,000. So let's explain this sentence. old equipment, the cost for this equipment is 60,000. And he's saying that the net carrying value, which is the book value, okay, is 53,000. So what was the accumulated depreciation for this equipment? As you know, book value is cost less accumulated depreciation. So 60 less x equals 53. So what's x? X is 7,000. Okay. Now he said it was sold for cash at a gain of 10,000. So the sale price here is higher by 10,000. So we have 10,000 gain on sale of old equipment. So the sale price was 63,000. I'm gonna use the 63,000 in the investing activities. Okay. Now new equipment was purchased for 100,000. So I bought a new equipment for 100,000. Okay. Shown below are selected closing balances for last year and the current year. So last year, current year. So this is the direction. So we have cash, accounts receivable, inventories, equipment, accumulated depreciation equipment. So all of these are assets. Accounts payable, notes payable, these are my liabilities, and this is my equity section, common stock and retained earnings. Okay. So you can print the file mentioned in the description to see the full question as I'm solving. So again, for the operating activities using the indirect method, I'm gonna start with net income. As you can see in this question, the net income was given and it's 82,000. Okay. Then, as we said before, I'm gonna add depreciation expense, or if we have depletion or amortization expense. And in this example, we had only equipment, so I'm gonna have depreciation expense only. Now, it's not gonna be given, okay? You need to find it out. So I'm gonna solve it here. So as we said, there was an equipment or an old equipment cost 60,000, and he said the book value is 53,000. So we said the accumulated depreciation, okay, is gonna be x, and it's gonna be 7,000 because 60 less 7 equals 53. Now the accumulated depreciation, as you can see in the table, okay, last year was 70,000, okay, and now it's 83. So now when I get rid of an old equipment, I sell an old equipment, I need to remove the accumulated depreciation for this equipment. So I need to remove the 7,000 accumulated depreciation because it's sold. Okay, so it should be 63. Okay, but as you can see, the new balance is not 63, it's 83. It's higher by 20,000. So the 20,000 will be the depreciation expense for this year. Okay, so this is the depreciation expense I'm gonna use in my cash flow statement. So the depreciation expense here, it's gonna be 20,000. Okay, now as he said in the question, he sold this old equipment at a gain of 10,000. So we need to subtract gain on sale of equipment. So I need to deduct 10,000. Between brackets, it's minus. Now let's see the current assets and current liabilities. Okay, so other than cash. So look at the table. Again, you need to look at the question. So please print the file mentioned in my description for this video. Under cash, we have accounts receivable and inventories. Both are current assets. So I need to see the change on accounts receivable and inventory. So as you can see, accounts receivable was 43,000 last year, and now it is 37, so it has decreased. Okay, so when accounts receivable decreases, cash will increase. The opposite, to keep the equation balanced, they will go with the opposite directions. So I need to add the difference, which is 6,000. Now what about inventories? Okay, let's look at this account. Inventories balance last year was 93,000. Now it is 105. So it increased. So it's a current asset account. So when it increased, cash will decrease by the difference, which is 12,000. Okay, so those are my current assets. For the equipment and accumulated depreciation, it's long-term asset. Now let's go to the liabilities section. We have accounts payable and notes payable. Okay, accounts payable is the current liabilities. Okay, so accounts payable, let's see what's the change on accounts payable. Last year it was 22,000. Now it's 19,000. So as you can see, it decreased. When liabilities decrease, means cash will go down also, because I'm paying my debts. So it's gonna decrease by the difference, which is 3,000. Now let's see the total. 82 plus 20 less 10, it's gonna be 92. 92 plus 6, it's 98, less 12, less 3, so less 15. So it's gonna be 83,000. It's gonna be positive 83,000. Since it's positive, we're gonna say it's net cash provided. It's positive provided. If it's negative, we're gonna say it's used by operating activities. Hope that everything is clear. Now let's go to the investing activities. Now for the investing activities, I'm gonna look at long-term assets, which are equipment. So as he mentioned in the question, there was a sale of an old equipment. And what was the sale price? He said the book value for this equipment was 53,000, and it was sold for cash at a gain of 10,000. So it was sold at a higher price. So it was sold at 63,000 sale. So I received 63,000. How did I get the 63? It's the 53 book value plus the gain, the 10,000. Okay, and he said new equipment was purchased for 100,000. So we have purchase of a new equipment at 100,000 purchase. So I paid cash, so it's gonna decrease. My cash will decrease. So let me double check for the equipment account. The balance for the equipment account last year was 360. Okay, and now it is 400,000. Okay, so this is the cost. Okay, so 360, then I sold an old equipment, so I need to get rid of the cost, which was, as he mentioned in the question, old equipment with a cost of 60,000. So I need to subtract 60,000. Okay, then I purchased a new equipment, so I need to add 100,000. This is the new cost. So 360 less 60 is going to be 300, plus 100 is going to be 400,000. So is it the same as this one? Yes. So there was no other purchase of equipments. Okay, so these were the only transactions under the investing activities. So 63 less 100, it's going to be negative 37,000. Since it's negative, I'm going to write net cash used, not provided, used by investing activities. Last section is the financing activities. We're gonna look at equity and long-term liabilities. So if you look at your notes payable account, it was 100,000 last year, and current year it's also 100,000, so no change. Common stock also, it was 250,000, now it's 250,000, so again no change. Now we need to look at the returned earning. Okay, so this is the returned earning. I need to start with the beginning returned earning. I'm gonna add to it net income. I'm gonna subtract dividends declared to get returned earning at the end of the period. Okay, so beginning returned earning was 93, which was last year. It was 93,000. Net income, it was given at the top of the question, it was 82,000. And dividends is X. Ending returned earning was 175. So let's solve for X. So 93 plus 82, it's going to be 175. 175 less X equals 175, so X will be 0. So there was no dividends declared or paid during this year. So there was no effect on long-term liabilities or on equity section. So there was nothing under financing activities. So for the change in cash, at the end of the cash flow statement, I need to check. So I'm gonna add the result from operating activities to the result from investing to the result from financing to see the change in cash. So under operating activities, we got 83,000 positive. Under investing activities, it was negative 37,000. For the financing activities, it's 0. So now 83 less 37 plus 0, it's gonna be 46,000. So the change in cash was 46,000. Now let's go to the table given and let's check the cash. Now cash last year for the cash account last year was 39,000. Okay, and current year is 85,000. Now let's see the change. Did it increase by 46 or not? If the change is 46,000, then it's correct. Okay, so you need to add the 46,000 to the beginning to get the ending, the 85,000. If it's correct, then you made everything correct, inshallah. Thank you for watching. If you have any question, please leave a comment. Please like, share and subscribe.